7 words. That's all it took to send global markets into chaos today. 7 words from a man who has spent decades at the very heart of power, the one who knows the levers of economic destruction better than anyone else. And that man is Donald J. Trump. In a move that shocked both allies and adversaries, Trump signed an executive order that no one saw coming, targeting Canada, a nation long considered a steadfast partner. The White House described it as a measure to protect American financial sovereignty, but the reality was far more dangerous. Millions of ordinary Americans woke up tonight facing frozen bank accounts, halted payments, and a financial paralysis that had nothing to do with their own actions. By the time Canada responded, the world had already realized this wasn't just a political spat. This was a calculated, high-stakes confrontation, and Trump had lit the fuse. Currency markets screamed. Stock indices plunged. The dollar's dominance, the backbone of global finance, was suddenly under threat. And while most of the world was scrambling to understand what had happened, Trump sat at the center of it all, watching the consequences unfold exactly as he had planned, forcing the question every ally and adversary will now ask: what happens if no one is safe from his power? To understand why the world reacted like it did, you need to know the players and the stakes. Donald Trump didn't act on impulse. This was a calculated strike against Canada, a nation the United States has considered an ally for over a century. But in Trump's mind, alliances are only as strong as the leverage you can enforce. It started with energy. Canada refused to guarantee certain energy exports, a move Trump saw as a direct threat to American interests. To him, inaction was weakness. And Trump never allows weakness to go unpunished. For months, advisors warned him that targeting an ally could backfire. But Trump understood something few others did: the U.S. financial system, the dollar, and its control over international banking gave him a weapon more powerful than armies, more precise than missiles. By freezing Canadian banks' access to the U.S. dollar system, Trump aimed to create asymmetric pressure: pain for Canada, minimal risk for the U.S. Millions of Americans, unknowingly, would be caught in the crossfire. Mortgage payments, payroll transfers, everyday transactions, all could be disrupted. That's the scale Trump was playing at: political strategy with immediate, tangible consequences. Meanwhile, the world watched, wondering how Canada, one of the closest U.S. allies, would respond. Would they cave? Would markets collapse? Or would someone quietly prepared to fight back reveal themselves? Trump knew the answer. He had studied the vulnerabilities, calculated the risks, and deployed his weapon at the precise moment he thought would maximize impact. But what he hadn't accounted for was the single man capable of striking back with equal precision: Mark Carney. And when Carney moved, the game changed forever. Every ally, every investor, every central bank in the world would now ask the same question: if Trump could wield the dollar against Canada, what country could ever be safe from his financial power? At 3:12 p.m. Eastern Time, the world changed. Donald Trump, sitting in the Oval Office, signed an executive order that no one had expected. The target: Canada's 6 largest banks. The weapon: America's control over the dollar system. The result: instant chaos for millions. The order froze all correspondent banking relationships between U.S. and Canadian institutions, immediately cutting off Canada's financial arteries to the United States. Effective at midnight, Canadian banks could no longer clear dollar transactions, settle trades, or process wire transfers through American banks. For millions of Americans, accounts held in these institutions would be inaccessible. Mortgages, bills, salaries, all halted. And Trump knew exactly what he was doing. This wasn't a misstep. This was strategy at its rawest form: force Canada to bend without firing a single shot. The White House called it protection of American financial sovereignty. The press called it unprecedented. But the truth, the real truth, is simpler and far more dangerous. Trump weaponized the dollar against an ally, testing the limits of his own power. Every advisor in the room understood the risk. Every lawyer shook their head at the legality. But Trump didn't care. He saw leverage, opportunity, and control, and he struck. By cutting off access, Trump calculated that Canada would feel pain faster than the US. Canadian commerce would stall. Treasury holdings would be threatened. Markets would wobble. The goal was not chaos for chaos' sake, it was coercion. And Trump, more than anyone, understood coercion. He had spent decades reading markets, shaking industries, manipulating systems. Today, he applied that same logic to sovereign nations. And yet, in his plan's brilliance, there was an assumption. Trump assumed Canada would be reactive, predictable, vulnerable. He assumed no one could match his understanding of the financial system. He assumed the United States was untouchable. Within hours, those assumptions would be challenged. The man who Trump underestimated had already positioned his forces. And the consequences of Trump's strike would ripple far beyond banking halls, affecting global markets, U.S. households, and the very trust that the dollar relies on. By the time the markets opened the next morning, everyone would know Trump had declared a financial war, and Canada had just received the first warning shot. By midnight, the consequences of Trump's executive order hit home, literally. Millions of Americans across New York, New Jersey, Florida, and Connecticut woke to accounts that were frozen. Payments stalled. Mortgages untouched. Payrolls trapped. For ordinary citizens, this was financial paralysis, caused not by their mistakes, not by a failing bank, but by a political battle between governments. Trump knew this. Every frozen account, every delayed payment, was part of the pressure he intended to apply. It was a blunt instrument, but a precise one in his mind. The disruption wasn't collateral damage, it was leverage, and leverage is Trump's specialty. Banks with branches across the East Coast, holding hundreds of billions in deposits, suddenly became pawns in a high-stakes game. Retail customers couldn't withdraw cash. Businesses couldn't pay suppliers. Bills went unpaid. And all of it was legal, or at least as legal as the U.S. presidency could make it. The law had never seen a move like this before. Yet, as chaos spread, one thing became clear: Trump's strategy was working exactly as intended. Anxiety spiked, questions circulated, and financial headlines screamed unprecedented and historic. But he also miscalculated one factor: Canada's response. He had assumed panic, predictability, and submission. What he didn't expect was a countermeasure so sophisticated that it would not only neutralize the immediate threat, but also set the stage for a financial retaliation the world hadn't seen in generations. Millions of Americans, unknowingly caught in the crossfire, were now living the consequences of Trump's gamble. And while they worried about their money, markets, and their homes, one question loomed over every bank, business, and central banker: how far would Trump go, and who else might feel the sting of his power next? Trump thought he had chosen his battlefield wisely. He believed the United States, with its control over the dollar and the global financial system, was untouchable. He believed Canada would react predictably, caught off guard and vulnerable. But he hadn't counted on Mark Carney. Carney is not a typical politician or bureaucrat. He is a man who has spent decades inside the world's most powerful central banks, a strategist who has managed crises that shattered economies. He guided the Bank of Canada through the 2008 financial crisis, ensuring Canada was the only G7 nation whose banks did not need a government bailout. He led the Bank of England through Brexit, navigating currency collapses and market panic with surgical precision. And he has cultivated relationships with central banks and sovereign wealth funds across the globe. Trump's move, calculated as it was, underestimated one thing: Carney doesn't react, he anticipates. While the world scrambled to comprehend the White House's unprecedented strike, Carney had already positioned Canada's defenses. He saw the vulnerabilities, understood the pressure points, and had prepared a counterstrike that would turn Trump's weapon back against the United States itself. The stage was set. Trump had launched a financial war, confident in the asymmetry of power. Carney was ready to rewrite the rules. And when he spoke, when he revealed the network of preposition swap lines and the plan to sell U.S. Treasury holdings, the narrative would shift. Suddenly, the aggressor became exposed, and the ally Trump thought he could bend on a dime had the ability to fight back with devastating effect. Every central banker in the world, every investor, every market participant would soon see the same truth: Trump's financial power, formidable as it is, was not absolute. And Carney, quietly waiting in the shadows, was about to prove it. At 5:08 p.m., Mark Carney stepped to the podium in Ottawa. The room fell silent. Reporters had heard whispers, but no one fully understood the depth of what was about to unfold. Across the continent, markets were bracing. And Trump, watching from Washington, likely assumed this would be a routine statement. He couldn't have been more wrong. Carney spoke with precision, clarity, and authority. He began by detailing the unprecedented nature of Trump's executive order, freezing Canadian banks' access to the U.S. dollar system, targeting an ally, and disrupting the lives of millions of Americans and Canadians alike. Every word he chose underscored the audacity of the White House's move. Then came the twist. Carney announced that Canada would sell its U.S. Treasury holdings, $319 billion in government securities. Those 7 words, "Canada will sell its U.S. Treasuries," sent shockwaves across trading floors. The bond markets reacted instantly. Yields spiked. The U.S. dollar wavered. Mortgages, loans, and corporate borrowing were suddenly at risk of higher costs. But Carney didn't stop there. He revealed a coordinated network of emergency swap lines with the European Central Bank, the Bank of Japan, the Bank of England, and the People's Bank of China. Canadian banks could continue clearing transactions in euros, yen, pounds, and yuan. Trump's weapon, the dollar system, had been neutralized before it could fully strike. Canada could operate independently. Every detail of the plan had been prepositioned. Carney had anticipated this confrontation weeks in advance, preparing contingencies and lining up international support. The United States' assumption that Canada would panic was shattered in a single press conference. And then Carney framed the stakes globally. He explained that other central banks were now questioning their U.S. dollar holdings. If even a fraction of global reserves shifted to euros, yen, or gold, the dollar's dominance, and Trump's assumed financial power, would be permanently challenged. Trump had believed he controlled the narrative. Carney proved that control is never absolute. The aggressor had been met with foresight, strategy, and execution. By the time reporters left the room, one message was clear: this was no ordinary confrontation. The world had just witnessed a financial chess match, and the ally Trump had underestimated had made its first move, and it was devastating. By the time Carney finished speaking, the financial world had already reacted. Within minutes, the U.S. dollar index dropped 3.1%, marking its largest single-session decline in over a decade. Traders scrambled, analysts recalculated, and global markets were sent into a spiral of uncertainty. Trump, watching from the Oval Office, saw the immediate impact of his executive order, but perhaps not the full magnitude of Carney's counter. The sale of $319 billion in U.S. Treasury holdings, coupled with the emergency swap lines, had created shockwaves that could ripple across the globe for months, even years. American bank stocks plunged between 8 and 11%, as investors priced in the risk of a potential U.S.-Canada financial confrontation escalating further. Mortgage rates, tied to Treasury yields, jumped in anticipation of higher borrowing costs. The everyday costs for American families, already stretched thin, suddenly spiked, translating Trump's political move directly into tangible hardship. Gold surged $127 an ounce, hitting all-time highs. Safe haven assets became the refuge for nervous investors worldwide. Every central banker, from London to Tokyo to Beijing, was now asking the same question Carney had predicted: if America could wield the dollar against Canada, what nation could ever feel secure holding U.S. reserves? The irony was undeniable. Trump's weapon, the dollar system, the very backbone of U.S. financial power, was now a double-edged sword. His move had intended to paralyze Canada, yet markets had responded in a way that threatened U.S. economic stability. And while Washington scrambled to assess the fallout, the world had already seen a new reality. Trump's financial moves were audacious, but Carney's counter had exposed vulnerabilities in the system no one had fully appreciated. Every headline, every ticker, every analyst's phone call carried the same urgent subtext. The US dollar was no longer untouchable, and Trump's gambit had awakened a global awareness of that fragility. In that moment, the financial battlefield had shifted. Trump had launched the first strike, but the counterattack had not only neutralized it, it had reshaped the game entirely. The question now loomed larger than ever: how far could Trump push, and who else might rise to meet him in this new era of financial warfare? The immediate chaos was only the beginning. While Trump had intended to use the dollar system as a precise weapon, Carney's response had revealed a far more unsettling reality: the US dollar's dominance is not unshakable. Every central banker, every sovereign investor, every Treasury desk around the world now faced the same question. If the United States could weaponize its financial system against Canada, what stopped it from doing the same to us? Trump had assumed trust and predictability, belief in the US financial system's fairness. That assumption was shattered today. Carney's counter demonstrated that even the most sophisticated US financial leverage could be circumvented with foresight and preparation. Emergency swap lines, alternative clearing networks, and prepositioned Treasury sales meant that Canada could operate independently of Trump's dollar system. The ripple effects are enormous. Global investors will rethink risk, reallocating reserves from dollars to euros, yen, or gold. U.S. Treasury securities, once considered invincible, face a potential flood from allied nations questioning the reliability of America's financial promises. Interest rates, borrowing costs, and mortgage payments in the United States could increase permanently. The era of unquestioned U.S. financial hegemony may be entering a new chapter, and Trump's actions are the catalyst. Even allies, historically reliant on the dollar, are now evaluating alternatives. Trade, lending, and reserve strategies will no longer assume American neutrality. Trump's gamble, designed to intimidate Canada, may have instead triggered a gradual multipolarization of global finance. The very leverage he wielded as president, the dollar, has been shown to have cracks when faced with a leader who understands the system as deeply as Carney. For Trump, the question is clear: how far can he push before the world pushes back? Every future financial move will be scrutinized under the shadow of today's events. Trust in U.S. financial authority, built over decades, has been fractured. And while Trump may celebrate the immediate appearance of power, the systemic consequences, ranging from reduced influence to higher borrowing costs and geopolitical pushback, could define the remainder of his presidency, and perhaps the global financial order for years to come. In other words, today was not just a confrontation. It was a revelation. The dollar, Trump's ultimate tool, is formidable, but it is not invincible. And the world just saw exactly what happens when the U.S. tests that boundary against an ally who refuses to back down. From here, the path forward is uncertain, but one thing is clear: Donald Trump has set in motion a chain reaction that could reshape global finance. Analysts, central bankers, and investors are now exploring three possible scenarios, each with high stakes for the United States and for Trump personally. Scenario 1: rapid de-escalation. Political and legal pressure mounts. Millions of Americans cannot access their accounts, and the backlash forces Trump to reverse the executive order within 48 hours. Carney suspends Treasury sales but keeps the swap lines active. The immediate crisis subsides, but the structural damage is done. Canada now operates independently of the US dollar system, and other nations quietly accelerate their own diversification. Trump's reputation for decisive power remains, but the illusion of control begins to crack. Scenario 2: escalation. Trump refuses to back down. Canada sells $30 billion in U.S. Treasuries each week, driving 10-year yields above 5.5% and pushing mortgage rates toward 8.5%. The housing market freezes. Stock markets collapse. The Federal Reserve is forced to intervene, buying treasuries to stabilize yields. Inflation spikes. Every American feels the cost of Trump's gamble in real dollars. The confrontation becomes the defining financial battle of the year, with Trump's boldness on full display, but at enormous domestic risk. Scenario 3: long-term multipolar shift. Carney's swap lines become permanent, and Canada settles energy exports in euros and yuan. Other nations, watching Canada's success, create alternative non-dollar financial networks. Within 18 months, the share of global trade conducted in US dollars drops significantly. Trump's immediate show of power inadvertently accelerates a slow erosion of dollar dominance, permanently raising borrowing costs and weakening US influence abroad. In every scenario, Trump remains the center of attention. His audacity has reshaped the playing field, forcing allies and adversaries alike to reconsider assumptions about American financial power. The question that will linger long after the headlines fade is the same one Carney posed today: if America can weaponize the dollar against an ally, who else will dare challenge, or be challenged by, Trump next? By the end of the day, one thing was undeniable: Donald Trump had shifted the global financial landscape, and the world had watched in awe, fear, and disbelief. What began as a targeted move against Canada, the freezing of bank accounts, the disruption of commerce, had unveiled the fragile underpinnings of American financial power. Trump's audacity was both his weapon and his gamble. He had assumed absolute control over the narrative, relying on the dollar system to enforce his will. But Carney's prepositioned strategy exposed a critical vulnerability: even the most powerful nation on earth could be challenged if its tools were understood and countered. For ordinary Americans, the immediate consequences were real: frozen accounts, rising mortgage rates, and uncertainty about the stability of their financial institutions. For global markets, the ripples extended far beyond North America. Trust in the US dollar, the backbone of decades of economic influence, had been questioned for the first time in generations. And yet, Trump remains at the center of the story. His choices, his calculations, his risks have forced every ally, every central banker, and every investor to reconsider assumptions about US power. The headlines may fade, but the questions he provoked will linger. How far will Trump go? Who else will feel the weight of his decisions? And in this new era of financial brinkmanship, is anyone truly safe? In the end, Trump's audacity reshaped more than markets. It reshaped the world's understanding of the limits of American financial might.